and every Friday లాగా ఇవాళ కూడా మేము మీకోసం ఒక ఫ్రెష్ మార్కెట్ వాయిస్ తీసుకొచ్చాం to share their market insights with you and to share their observations of the technicals of the market. Ruchit Jain joins us from 5paisa.com. Ruchit, thank you so much for chatting with us today. And every Friday లాగా ఇవాళ కూడా మీకోసం ఒక ఫ్రెష్ మార్కెట్ వాయిస్ తీసుకొచ్చాం.
Yeah, hi Karunya. Very good evening and thank you very much for inviting me to your show today.
Great. So, Abhi, it's Navratri time and everybody is busy doing a lot of festive shopping, festive buying. Around Diwali, we talk about somewhat trading as well. So, very, very auspicious time, not only for personal consumption, but also to start our investments or to review our portfolios and see how we can create more wealth for ourselves. Amid all of this, we are also looking at major macro concerns. We are looking at geopolitical tensions. We are looking at Fed still sounding very, very cautious. So what do you think lies ahead for the index? Going purely by the technicals, of course, we know macros and fundamentals, how they're playing out. But technically, what do you think? Where will the benchmarks go from here, or will they continue to stay in this range till the end of the year?
Yeah, so as you rightly pointed out, Karunya, that the domestic factors remain quite strong. Whether you look at the consumption pattern, or our GDP numbers, inflation numbers, everything is in favorable of our economic growth. But it's macro factors which are daunting our markets in the short term. The rising bond yields which we have seen in the US, particularly the bond yields has an inverse correlation. Equity markets have inverse correlation with the bond yields. So if the bond yields go up, then certainly that's not a good thing for the equity markets, because even dollar index goes up. So that is also not positive for the equity market. So what we are observing in last couple of weeks is this is more of a short-term correction within an uptrend, and this is led more by the global factors. So unless we see any reversal in these global factors, whether you take it that war which has just started between Israel and between Israel. So I think the domestic factors would be on the sidelines, and these global factors would continue to dominate over the markets. So technically, I think we are in a corrective phase. We have already seen a good run up of about 6 to 7 months since the start of April month till the first half of September. So after that, we are in a correction phase, but this correction just seemed to be a part of an uptrend. So things were quite overbought, and usually such overbought scenarios leads to correction. Now, as far as levels are concerned, 19,350 to 19,400 will be very important support range for the Nifty in next couple of weeks time frame. In case if we see these levels getting breached, then I think selling pressure could continue on the lower side, where we would expect levels around 19,000 to 18,900 range. But on the higher side, 19,800 to 850. This is the range which is has become the crucial resistance, and it is the 61.8% retracement of the previous correction. So an up move should be resumed only if we cross that barrier of 19,850. Otherwise, we could see a couple of weeks of time frame where correction would continue in the markets. Now, if one is a short-term trader, then I think one needs to be cautious in this corrective phase, because mid-cap, small-cap especially has seen a decent run-up over last 6 to 8 months, and they have not corrected yet. So in this corrective phase, we would see a lot of stock-specific correction going on. So I think that's why traders need to be cautious. But of course, if you are a long-term investors, and if you get that dip around that 19,000 mark, ideally that would be a golden opportunity, to create a portfolio maybe around Diwali itself. So that would be a good opportunity to create a portfolio and buy for next 6 months to 1 year's perspective.
I want to bring your attention to FMCG stocks. Today was a day when, it was front and center, cynosure of all eyes. Yesterday was an earnings heavy day. HUL, ITC both failed to impress the street, right? We saw both of them cracking a fair bit. While on the other hand, of course, Nestle was in the sweet spot. Good brokerage reactions, good earnings response from the street as well. But if we talk about technicals right now, the way some of these names are placed, ITC still at a solid above 420, 425 levels, 430 levels actually. HUL continues to be above 2,500 threshold. Nestle, we've seen a good run up coming by. What is your sense on FMCG stocks, especially the heavyweight names, because they are typically slow movers. We only see very stock specific news coming in when they react usually.
So generally, when it's no results season, when corporates announce their results, it's more of a stock specific movement that happens. And what we have seen
Yeah.
in both ITC as well as HUL post results, there have not been significant buying interest seen. So I think in the short term, we could see some relative underperformance. We may not see any significant price wise correction, but at least a time wise correction could happen, but the stock would continue to consolidate in a broad range. So we are not expecting any run
Mm.
up move no in heavyweights such as HUL and ITC, but rather, if you look at some of the other stocks such as Nestle, you just told that, post results, the buying activity has been very strong over there. Even Kolpal, if you see off late, this stock has shown a very good relative outperformance within the sector. So I think such stocks, which are not falling in this corrective phase, where relative strength is there in this corrective phase, they would continue to show a good outperformance. So I think no one should prefer to take more of a stock specific approach within the sector, and stocks such as
Mm.
Nestle, Kolpal, are likely to continue this outperformance, whereas those stocks have not reacted much positively to the results. They are likely to continue the underperformance in the near term.
Correct. All right. What about PSU Banks? Very wild gyrations. One day it is one of the biggest performers. The next day we see PSU Banking Index crack. So is it a lot of immediate profit booking that's happening? A lot of trading activity taking place, or what's happening? Because right now still there is a fair amount of fundamental analysts who remain bullish on PSU Banks. They still think there is that valuation is very attractive. On the other hand, people are worried that these PSU banks have already run up a fair bit, and maybe this is not a good time to enter. What is your verdict from a technical standpoint?
So especially Corona, if you look at the mid-cap PSU banks, certainly they have
Hmm.
seen a decent run-up in last 5 to 6 months. But whenever you see
Yeah.
such run-ups where within 5 months you see stocks getting doubled or even more than double, some of the stocks have gone. So you should expect a lot of volatility in such names. Whenever profit booking comes or corrections comes, that corrections would be very sharper as well. So that's the phase that is going on in the PSU banking space right now. It's more of a profit booking seems. If I look at the Nifty PSU Bank Index, then major support for Nifty PSU Bank Index is placed around 4,700. So right now that index is at 4,950 to 5,000. So maybe more 5 to 6% correction could be seen in the index, but it's not a part of a downtrend. This correction which we are looking at is just a corrective phase within an uptrend. So buy and dip strategy should be kept in the PSU banking names, and whenever the index approaches that 4,700 mark, the Nifty PSU Bank Index, that should be a good time to start buying the PSU stocks again.
Okay. I have a live question coming in from one of our viewers. His name is Prem, and he is asking what would be a fair price to buy into SBI. What do you think?
So yes, we are talking about PSU Bank itself. So SBI, if I look at the weekly or the monthly chart, then good support base has been placed around 530 to 540 range. So what I'm referring is the weekly 89 EMA. And if I look at some of the historical data, then post December 2020, right? I'm talking about last 2.5 years. Whenever there has been corrective phase, this weekly 89 EMA has not been breached in the stock, and that is in the range, somewhere in the range of 530 to 540. So if you get any dip
Hmm.
towards that level around 530, so that could be a very good opportunity to buy SBI from an investment perspective. So it's just a short-term correction which is going on in SBI as well. Recently, we even witnessed some selling pressure from higher levels in stocks such as SBI, Bank of Baroda. So buy and dip strategy should be kept, and if the stock comes around that 530, 540 range, that should be a good buying opportunity.
For those looking at the bigger picture, Nifty Bank, or even private lenders, the heavyweights, especially from the Nifty 50 space, do you think any of those private banks also make for good buys right now, or is it a better time to steer clear of these private sector banks? Because even brokerages have come out with notes saying that at least in the near term, the Q2 numbers do not look very optimistic.
So yes, one should wait for the numbers to come out for most of these. I think the underperformance could be there. In fact, if you look at banking index also, The banking index, in last 2 or 3 weeks have shown a relative underperformance to Nifty, where we witnessed a pullback move from 19,300 to 19,800 in the Nifty index. We did not see such retracements coming in from the banking space. So these are clear signs of underperformance coming from the banking names. So maybe this results, next 15-20 days, next 2 to 3 weeks, the underperformance would continue and stock specific approach would come on. So Federal Bank within this space, if we look at, that is one of the strongest private sector banks that I can see, where positional chart structures are quite positive. Any declines towards 140 should be a good buying opportunity in Federal Bank. Apart from this, the stocks which have been underperforming, I would suggest to stay away from those names and rather look for names which show strength post their results.
We are pretty much in the thick of earnings season. It's also the festive time. Q3, this quarter that we are in right now, is very, very critical for consumption names, both essentials and discretionary. Jewelry retailers, apparel retailers, textile companies, all of white goods as well. So how are these looking to you on the technicals if somebody wants to play the festive theme or the festive fervor? Any of these names look good for the next 1-2 months or so?
So I think amongst the jewelry retailers, Titan is one company that has shown a good outperformance. The high top, high bottom structure technically is still getting continued, and we are not witnessing any kind of high volume selling in this stock. So I think this is where one stock where the strength would continue going ahead. So Titan can be bought on any kind of declines around 3,100 to 3,150 range. Apart from that, I think textiles would be one sector which relatively, if one has a view from next 1 to 2 quarters, I would say, then textile sectors could do well. So that would be one space where one should watch out for. Gokuldas Export is there, Welspun India is there. So these are a few names where price volume action is quite positive on midterm charts. So in case along with the market decline, if we see any kind of retracements or corrections in these names, then these are also a good. These could also be good buying opportunities.
Since we're talking about consumption names, one of our viewers, I don't have his name, but his handle is TVS612. He's asking about Campus Activewear. His time horizon is 1 year, but in the near term also, if you could share some insight into how this could play out.
So there is a short-term downtrend which is going on in the stock. In last 1 year, the stock has corrected very significantly. If I look at the charts, historical data, then exactly a year ago, the stock was trading around 600 levels. From 600, the stock has corrected to below 300, and all the pullback moves in this last 1 year which we had seen, we have not seen any kind of high volumes coming in this pullback move. So unless we see a good price volume action, I would advise to stay away from this stock. Technically, the resistance is around 300 to 320. So let's wait for a breakout above 320, and only if we see good volumes on such breakout, then one should look to enter or do any kind of bottom fishing. Otherwise, the trend still continues negative, and hence one should avoid any kind of bottom fishing here. Karunya, I'm not getting your voice.
Are you
Yes,
able to hear me now?
Yes, yes.
So our next viewer is asking about India Cement for 1 year time horizon. How is India Cement looking?
This can be bought if we are looking for 1 year time horizon. In fact, I know many of the cement names have started witnessing a good price volume action where price up moves have been supported by good volumes. Even India Cement, whenever the stock approaches the 200, 220 range, we see a lot of support coming in for the stock. So the downsides seems to be limited from here on. And no one can take a gradual buying approach in the stock where one should start buying over here and look to add on any kind of declines if we get in the 210 to 220 range. So it's a good stock to buy. But as I said, it should be in a gradual manner where on lower levels towards 200, one should look to average out more. Karuna, I think you are on mute again.
Oh, pardon me. I was saying that this is the Navratri time, and I'm sure you're going to several channels and several media organizations and giving them your Navratri tips. I'm not going to ask you for 9 stocks for 9 days, but any stocks, for the next week, next 2, 3 weeks, perhaps in the run up to Diwali, that you think could be strong gainers?
So we were talking about banking space, and if I look at the banking stocks, then IndusInd Bank is one of the stock which is looking very strong. Primarily, we have seen that in this entire Bank Nifty correction of last 1.5 months, this has shown very good relative strength, and we have not seen any kind of price-wise correction happening there. Volumes and the price up moves are quite good. So I think this is one stock where we could expect a run up towards 1570, 1560 or in the short term. So one can buy IndusInd Bank over here, keeping a stop loss below 1420 for targets around 1570 in the near term. And apart from that, no persistent system from the IT space is looking very positive. So if I look at the entire IT basket, we have seen that the most of the companies have declared their results. The frontline companies have declared their results, and after that initial selling reaction, there is no follow-up selling, no, like we witnessed in the last 2 or 3 quarters in the IT heavyweights. So I think some of the mid-cap IT stocks would continue their outperformance, and Persistent is one stock which is looking quite positive on the daily as well as the weekly chart. So one can go long on Persistent systems as well, keeping a stop loss below 5600 for positional target somewhere around 6300.
All right, Richard. Thank you so much for chatting with us, for sharing your market readings, your observations of various stocks, and for answering our viewers' queries as well. We wish you once again, a happy Navratri and a happy Dussehra next week. Thank you, guys, for tuning in, and wish you all a very, very happy Dussehra from all of us at Sakshi.